How's life been?
It's good. It's good, man. Just been just been trying to get through the new year and all that fun stuff. And today's been pretty quiet, which is nice because we are closed for MLK. So it's just been me in the office, and it's amazing. I get a lot of stuff done.
Yeah, yeah,
Banks are
no,
closed
seriously.
today, so it's been pretty quiet. So this is a good time. I just had a lunch, and we changed venues, and I was a little putting me back, getting back,
Yeah,
but that was perfect.
yeah, no worries at all. You guys have been pretty busy this month, haven't you? I know you were opening up a new office about a month ago. Um, and I don't know, it just seems like January's been a busy time for you. Is that typical?
Yeah. It's some of these things had already been in motion, so it's more of just the timing elements of announcements. We've done some restructuring over the last 6 months just to reposition ourselves. The marketplace has definitely changed from where it was in 2021 and even early 2022. So it's been an active period. Some of it candidly has been, positive, and others has been, beat your head against the wall and figure some things out. And if you don't, you're going to pay for it. So we've had to, as a team, we've had to do the word that's been overused, pivot. We've had to do a lot of pivoting, but I think we found ourselves to be in a pretty good spot. I'm very happy with how our team has adapted and embraced some of these changes. And now our mantra is 2022 did not happen to us, it happened for us, and we're going to take advantage of that. So we'll see if we can
Yeah.
execute on that philosophy.
Yeah, because where have you been noticing the biggest pivots? Is it just in a slowdown in transaction volume?
Yeah, yeah,
Yeah.
100%. It's
Okay.
pricing, and I don't know about you. You're front line, so you see it firsthand. And all markets don't react the same, but our mainline markets, really Tampa, Nashville, Louisville, for that matter, we've just seen a tremendous amount of deterioration in the not pricing, but in the volume.
Yeah.
So if we had 2,000 opportunities, a year ago, there might only be 1,000 opportunities between lack of sales and lack of bank deals. It's a combination 1-2 punch. So we've had to lean into commercial. We've had to lean into some of our smaller markets where we're able to grab a little bit more market share because it's not as competitive.
Yeah.
In some larger markets, it's probably similar to the agency brokerage business. It's so competitive. It's gotten it's gotten very challenging.
Yeah. Yeah, I believe it. That's cool that you guys have been able to pivot. And hopefully you've been able to take a little time with less volume to be able to kind of focus on growing some other aspects of the business. Cause I know, I'm not sure where you guys are at in the whole blockchain infrastructure element, but have you been able to take any strides in that direction over the last month or two?
We have, but not in the day-to-day business. It's been more of developmental. We're still long blockchain. We're very long the technology elements, Web3, as a tool within real estate transactions. We see that as an inevitable outcome. It's just a matter of what the timing looks like. So we're still spending time and energy on how we're going to develop the roadmap of products. That being said, Tommy, we've probably have taken maybe a bit of a step back of what the timing and how we're going to really promote it. Just because there's a lot of, I would suggest, noise in the marketplace right now that we're not going to be able to overcome, even if we, had the, even if we had the best product. I don't believe we're going to get, a ton of engagement right now. So why shoot your bullets, when you don't really know, how it's going to be received. So we're being a bit strategic. At least that's what we tell ourselves.
Yeah. Yeah. And I think that's smart. And I think, in the industry we're in, which is, obviously highly regulated industry, maybe some of kind of what's transpired in the market will end up being a net positive for establishing some regulation, and how maybe give us some more insight into how blockchain could impact the real estate industry to a higher degree. Because I know, when the crypto's in the bull market, a lot of people are kind of distracted by, the random cryptocurrencies that come on. It looks like it's just a money play. But in these bear markets, it seems like there's more focus on development, infrastructure, blockchain technology, and how that can actually impact real world industries, as opposed to just, flipping coins and trying to make a quick buck on them. And that's why I do enjoy having these conversations, because it seems that the conversations these days are a little more level-headed. People are a little more calculated. They're not just jumping in and being instant experts. And I think that's been cool to see. So yeah, that's awesome that you guys are able to pivot, because I'm like, all of your transaction volume at this point is traditional, correct?
Yeah, we have handled some blockchain crypto based transactions. However, in the recent past, and when I say that, I mean in the past like 3 months, the interest level and the people reaching out to us with those type of transactions has really gone down. We still have conversations, and there still are people that are interested in using their currencies as a potential tool for real estate investment. That being said, I would say 80 to 90% of our discussion around, the blockchain piece of it is probably more on the tokenization side, and elementally how that will be fundamentally change real estate investment, and what underpinnings, what role we can play in that. So that is, we really leaned into the tokenization space. However, I would suggest that that's still really early, and there's still, a lot to be sorted out. And I agree with you 1,000%. Once we see more regulatory details instead of sort of these broad-based statements, then I believe that the banks, which is really who dictate what most people are going to do transactionally, they will start to come out with where they are strategically. Because there's a lot of people doing stuff. Even the big banks are doing a lot of stuff in the space, but I think they're sort of close to the vest right now.
Yeah, absolutely. That makes sense. And I assume when you're talking about the tokenization element, you're referring to commercial property, or are you talking about residential?
No, commercial. I think that seems to be the easy, not the easiest, but the most logical starting point. It's going to be accredited investors, and there's going to be security regulation elements attached to it as part of the phase one. And then hopefully as we sort of build this out, the framework out, which the framework's already there, just what market exchanges are really going to become dominant, who will be the main participants early on with regard to, putting out tokenization products. I mean, those are all sort of YTD. There's some smaller projects going on, but I would suggest those are just what they are, very small and controlled, and don't move the needle per se, but there's a lot of good takeaways from these projects that we can sort of build on in the future.
Yeah, absolutely. And one of the cool elements I find with that tokenization aspect, just kind of like with experience with real estate syndication and buying back from the general partner and how kind of complicated it can be as, an investor in those private developments. Introducing kind of marketplaces there is the reason I really like that is because blockchain is offering something that wasn't really possible before.
Exactly.
So it's not only making it more streamlined, but it's kind of taking the impossible and making it possible through that technology, which I think will really help, especially some higher level investors, digest the impact that blockchain can have. Obviously, real estate is the most frequented investment for high net worth individuals. It makes the most millionaires, I believe, is in the real estate space. And so if they can witness what blockchain offers them in terms of flexibility, I think that could have some kind of trickle down effect into some of the smaller vehicles like residential real estate. And how do you see yourselves being kind of implemented in that tokenization process? Or like, how is the title impacted?
Good question. It's a great question, and one that we've spent a lot of time, talking, researching, and really positioning, hopefully, ourselves as a resource and a stakeholder in that. All that being said, currently it's YTD because we could definitely be involved in a lot of the early, which is really mirrors the traditional model of just verification of ownership and the titling aspects that are required as one of the first elements of tokenization. You still have to have your baseline ownership, and how that's structured and so forth. There's a lot of different ways to tackle it before you actually take the next step, which is the fractional ownership. So that part of it is really not any different than what happens today. I think what we're trying to do is understand, one, how we can be a bridge between that initial step and then what future role we would play at either embedded within a marketplace, or if they go to some type of out sale recap when these tokenization projects do come to some type of liquidity event on top of just the fact that the tokens are floating around and trading on the marketplace. There have been real use cases where, like, Realty has sold a property that was tokenized, so there's a whole out sale part of that and a distribution element. So I could definitely see us on the back end as well, but that begs the question, what happens in between? Probably same as brokers are thinking about, or agents are thinking about it. You've got these interests of real estate trading around on these exchanges, assuming they're going to be traded through smart contracts. What place or what role, if any, do we have within those exchanges? So that's a conversation that we're working into. I think the challenge is that there are not a lot of mature exchanges out there as of right now. So they're sort of figuring it out, and they're honestly more focused on the security side of it, which I understand because of the regulatory piece. It's all about, okay, if we're going to do this, how do we make sure we dot this I, dot this I, dot this I? Oh, title, does that really matter at this point? Our input, and you could call it selfish, I think it's intuitive, or if you really follow the through, I believe we do have a role. Now, whether it's a real-time role or if it's some type of quarterly audit role, I think there are elements of title that would be relevant to these exchanges and the underlying asset. So if you do have a large property and you have tokenized it, and you do have those tokens running across an exchange, our philosophy is there should be some connectivity within the title space to validate and verify that the underpinning asset is still unencumbered and mirrors whatever the disclosures there are out there with that token. And so that could be done, on a quarterly basis. It potentially could be done in real time, depending on, how big these projects are and how candidly, how expensive the token transactions are. I would think if I'm going to move $2 million, $3 million, $200 million worth of tokens across on a transaction, I might want to check some things, be some due diligence. So that's just how we're looking at it. Tommy, I would be a liar to say that we've made a whole lot of progress, because I think the space is still so new that we don't know who to hitch our wagon to is the bottom line.
Yeah. No, and I think what you said about, with high transaction volume, people are going to want some assurance that they're really receiving a stake in this ownership of the underlying asset. Because at this point, tokenization is so misunderstood. And I know, your biggest goal, as we've talked in the past, is making sure that your clients are well taken care of and that they know what they're signing up for, they know what they're buying into or purchasing, and that you're taking care of that process behind the scenes to make sure that they're not buying something with no utility or, things along those lines. So I think the role that you're going to play is going to be a massive role in introducing consumers to this technology, because, it's going to take some getting used to really trust these systems that are in place. And you're really going to have to bridge, the way the system works now with how it might function in the future. And that's going to take people with the know-how in the current system and with some type of know-how in the future system, and kind of building that bridge with other service providers in the industry. And that's something I've really admired about the process that you've taken, even in terms of the wallet to wallet transactions that you've conducted in the past. I know a lot of people who I've talked to or different product offerings, whether they're web-based or whatever, maybe have cut some more corners than you did. So maybe you could walk us through, because I know you've done some Bitcoin residential sale transactions. Maybe you could walk us through how you conducted those.
Yeah. And just as a, as a disclosure, so I keep myself out of trouble. Some of what we did, we took a lot of the elements of the traditional practice and tried to make sure that they were still the baseline element for introducing some of this new technology application on top of it. Mainly because we wanted to protect all the parties, knowing that we're still in that innovation stage. And I had actually, when we first started working in the blockchain space a couple of years ago, I was talking to a tech guy, and it was funny because for some reason I couldn't get my brain unwrapped around, well, we just have to develop a tech tool. And he kept saying, no. You need to develop a value use case, and then we need to see how tech will enhance that. And I'm like,
right.
I kept trying to jump and so I think that has been really a helpful roadmap for us, because we're actually, and some of the things you just touched on regarding, the tokenization, a lot of it will probably start out being very manual and being very, very basic and laborious. But the goal is then you can bring in these elements of technology, and you can start to use, whether it be AI or whether it be, other computational tools in there. There's already a lot of stuff that's out there. You just have to understand how you want to deploy it and where it makes the most sense. So back to your question on the wallet to wallet. I always tell people a couple of things. One, it's not for everybody. It's probably for a very few people even nowadays. And we were very open and honest about that. So when we first introduced what we were way back when calling it encrypted estates, and it was really this sort of escrow based around digital currency, also known as cryptocurrency. And we tend to lean into the term digital currency, mainly just because crypto brings out sort of it can get a lot of negative connotations. And, our goal is we're really looking at this using the technology, blockchain, payment rail systems, which in this case, the most popular one is the Bitcoin Lightning Network. But there's many other, payment rail systems built upon blockchain that are out there and running today. So we're going to talk about Bitcoin, though, because it's the most widely known and currently widely used. It'll be interesting to see, and I know the Bitcoin maximalists would not like me to say this, but, there could be a day and age where it's not. And there's another type of digital currency that essentially is, the leading product on top of these payment rails. But what we do, essentially, everything is very buttoned up like a normal transaction. Buyer, seller agree on a price. They're going to agree on that price in US dollars. We have to do that for numerous reasons, but the biggest reason is the tax man. That's what they care about. And then everything title-wise still runs along the title spectrum. Anybody that tells you, this is my opinion, anybody that tells you that you don't need to bring title into it, that you can just do a deed for deed or something like that, that's a buyer beware moment, and to be one that I would be very skeptical of. And I've heard of those where people are literally trading deeds directly between parties, and they're trading, currencies between parties, and they're trading properties. The challenge there is you're skipping a lot of steps, and I think you're introducing potentially a lot of uncertainties into the ownership piece of it moving forward. So we do all the normal title elements. We check, verify ownership with the clerk's office. We check with the taxing authorities to make sure the tax has been paid. We check with land records to make sure that there's no other encumbrances on the property. And so we button all that up and we get a title product together. Where the Bitcoin comes in is at the day of closing, where the buyer and seller have agreed. I'm the seller. I'm willing to take X remuneration in the form of Bitcoin in return of my US dollar price of whatever it is. And I'm the buyer, and I'm going to be prepared to have the Bitcoin. The one thing I will say is the title company, one, we have a ton of disclosures. There's some KYC, AML elements that the buyer has to go through. Both of them have to have wallets. Both of them have to sign disclosures saying market volatility. They're going to close at a certain time. And when they do that, they're going to lock in the conversion. There's no arbitrage. If they want to do any of that, if you're a seller or you're a buyer and you're worried about currency risk, just as like if you're going to get paid in euros or even US dollars has currency risk embedded in it, depending on, what you're going to do with your money in the future. But that's all on you. That's, we actually don't touch the cryptocurrency, the digital currency. So we're not a market maker. That has nothing to do with us. So you would sit down at the closing, all vendor payouts, like your commission, Tommy, whatever would be paid in US dollars. That money flows in from the buyer in US dollars, not Bitcoin, because we can't accept US dollars. Now, what we can do is we can work with a third party that will allow the buyer to send Bitcoin to them, and then they will send us the US dollar. So it's a real-time conversion. There's a group called Foreign Pay or BitPay. But we tell the buyers, hey, you're in charge of investigating that. We have relationships, but we don't give endorsements because we just have to be careful. If something were to go off the rails with that vendor, we don't want to be, ultimately we're the, for all intents and purposes, we're the fiduciary. So we have to be very mindful of that. But after the payouts are made to the vendors, if there's a payoff involved, all that would run through our escrow company. We would handle all those payments vis-a-vis US dollars. And then whatever's left over, let's just use round numbers. Let's just say there's $100,000 left to be paid to the seller from the buyer at the time of closing. And we only do this in person because the way we do it, it's a true wall-to-wall, and it's a true QR code exchange. They would pull up their QR code, programmatically put in the amount of US dollars due, which would do a conversion. They'd agree upon the exchange, and they would do what we call a wallet-to-wallet swap. We would sit there at the table, verify the money had been transferred, sign another disclosure saying, when I leave this table, I'm not coming back on Millenial Title. I'm not coming back on the buyer as the seller. I'm done. I've got my cryptocurrency, my digital currency, whatever you want to call it, Bitcoin, and it's mine. Buyer says, market shoots up, market shoots down. It's out of my hands. I've paid for it. I'm good. And then we can issue a title policy. That's the beauty of it. So you've got insurable title. Like I said, there's a lot of steps to it that at the very end, and they're mainly, honestly, disclosure steps. It's all about buyer beware, buyer beware, buyer beware, buyer beware. But it's doable. And for people, the cool thing about it was, on the deals that we've done, both buyer and seller are fairly familiar. It's all, the only ones we've ever done are Bitcoin based. And they all the parties are typically very pro Bitcoin. And you could argue, we did some that Bitcoin at the time was at over 40,000.
Yeah.
So, there could be an argument, well, that poor seller, is now sitting on, half of what they started with. But these folks, the ones that I've spoken to, they're in it for the long haul anyway. These weren't traders. They weren't looking at it from a trader mentality. The buyer had amassed a pretty large sum. They were looking to reallocate, and the seller was interested in leaning into the space. So I think there's a real use case. A couple of the big takeaways: one, super quick on the exchange. Two, we could have done it at 2 a.m. if we wanted. We happened to do it during normal business hours, but we could have come in here on Saturday. We wouldn't have been limited by the banks and when they're open. 3, it was a lot cheaper. I think it cost like 80 cents to move the currency. Wow. It was almost instantaneous. I'd love to say it was instantaneous, but it was not. I think there was a 3-minute lag between when the currency moved.
Oh, you were holding your breath for those 3 minutes, I'm sure.
Yeah. It was funny. I felt pretty good. The only thing that honestly, the first one that we did that did concern me was just making sure, obviously, that the wall connection was as we had, and we did a test. So it was the first one was, here, send them $20.
Yeah.
Boom, it worked. Then we came back and did the full amount. So yeah, it was, like I said, it was cool. And I think it's used, but I'll be very open and honest. We have not had a big drum roll for that recently. It's like anything else, ebbs and flows. I think if the markets get back on a tear, I could very well see us getting some people back interested. And I do think long term, as the banks really build out their payment rail systems, it might not be Bitcoin. It could be. It might be. I'll get a bunch of hate mail. It might be like a Circle. We see some type of maybe stable coin. I've had one person tell me that Fed coin, and that's pretty. That gets into the whole government overseeing everything. But if you can have something that's faster, more efficient, and the biggest thing is more secure, so you don't have those elements of some of that third-party risk that comes with these cashier's checks, certified checks, wires, where you get sort of that third-party intervention. If you do have that true wallet-to-wallet exchange where there's multiple verifications, and we can even set up a third-party authentication where we can be the multi-sig to say, okay, we validate, both parties have pinged each other. We validated that it's the receiver is who they're supposed to be. Then the money goes through. Then that would be, to me, that's a better system than we currently have.
Yeah, absolutely. And I think it's really cool. Like most title agencies would, if they were approached with an opportunity to do a transaction like this, they would just say no. And I think it's cool that you didn't just say we can't do it. You said, how can we do it? And obviously, you protected your company's interests with all the disclaimers and disclosures. But at the end of the day, the consumer wanted to try it out, and you figured out how to make that possible without taking on, a ton of risk on your end, which I really admire. And it just highlights your ability to kind of pivot, like we talked about earlier in this video with the differentiating markets and how you need to pivot as an entrepreneur and business owner. So I definitely applaud you for that. And I thought it was also really interesting how you highlighted, a lot of people have tried to do that deed for deed, kind of without involving title. And I think, with people who are really heavy in the crypto kind of decentralization space, they just kind of want to decentralize everything. And at the end of the day, yes, when you're buying a property, you own the home, but each year you're still going to owe taxes on that property. So you're essentially leasing it from a centralized entity, being the United States or whatever, country, municipality you're in. So taking that to a full decentralized, not involving title work and all of that just seems, a little risky for my liking. And you just don't know, you probably go through the transaction and it works out for, however many months, but I imagine you'd be a little nervous not having a little assurance that the transaction was all kosher and done properly.
Well, there's some use cases that that I would at least listen to on some of these programmatic transfers. But a lot of them, no pun intended, become problematic if you don't do the proper due diligence. And these are, depending on the scenario, but these are big investments, big pieces of people's balance sheet. And therefore the Uberization of some of this, it doesn't really align with the actual underpinning of the longevity of the transaction. When I hit a button and a car shows up and takes me from point A to point B, it's awesome. Love it.
Yeah.
Still looking back, I was like, how do we live without it? But the fact is, I get out and I go on my merry way. And if it was a bad experience, it was a bad experience. The car wasn't what I thought it was going to be, whatever. But when you're buying and selling a home, especially if it's a home, there's a lot of longevity involved in that. And so I think sometimes having the right amount of workflow and some friction is not terrible. And I still believe some human element of intervention. Now, do I think that it would be more effective and create a better client experience to have the deeds on the blockchain out of a central, out of the clerk's office onto a more open platform that has, a more robust validation capability, which is what the blockchain technology can enable, and then enable us as consumers and real estate professionals to access that information more efficiently and potentially, use it in a more dynamic way, whether it be tokenization or some type of fractional ownership, or just, making the process from A, B, C, D easier and less costly. Yes, I think that all of that is possible and something that we should be working on and leaning into. And that's what Millenial Title is trying to do. But you got to be careful because you could be boiling the ocean, which is something that we are not prepared to do. And so we're sort of eyes wide open to partnerships, opportunities to work with, collaborate with other folks in the space that are, really interested. And then being aware when the tipping points start to occur, when we start to see, I think you and I've talked offline about this, but what if Amazon one day decides that they want to be one of the largest repositories for real estate information? Google's already done the Library of Congress, so they've shown you the ability to do some of that indexing and tech stack that goes with that. And I believe blockchain is one of the best tools to do that. You'll have other people that will tell you there are other tools out there to accomplish what we're talking about. So I think we just have to be open-minded, Tommy, about what technologies the point for us, our mantra, at least we try to keep this mantra, is what will make the client experience better, what will make it more valuable, how can we enhance and create the best optionality for the specific consumer, because the one size doesn't fit all. And so that's a challenge, though. I mean, I'm not sitting back and saying, oh, it should all just happen within the next 12, 18, 24 months. I mean, this is the long game.
Yeah absolutely. And do you see a future where maybe it's not municipalities or governments that are necessarily adopting, or at least not producing, the blockchain technology to facilitate this title transfer? But how do you see, because there has to be, the government acceptance of this tech. Do you see it more impacting the way title companies function, or do you see a day where maybe municipalities do store title on a private or somewhat public blockchain of their own? Or kind of how do you see that playing out?
Yeah, it's a great question. And I've really gone through different iterations of where I think things are going to land. If you would have asked me 2 years ago when we first really started burning some calories in the space, I was very fixated on, okay, there's thousands of municipalities. They candidly do act fairly independently, especially when you go state by state, or even in some cases you could get even more micro. So how do you get all of those people sort of on the same bus to do to move this huge amount of data onto a new platform? And my initial like takeaway was that's not possible.
Yeah.
So why even pursue it?
Right.
But the more I have warmed up, and I'm not going to really give you a good answer. I don't think I have very many good answers on any of this, but I'm not going to give you as succinct of an answer probably as you'd like. But I think, or my thesis has pivoted into private public partners. I feel like it's either going to be prop tech and fintech coming together to say, okay, we need to squeeze the lemon, and we need to squeeze the cost out of these transactions, because everything you read is it's just getting more and more expensive to do loans. It's getting more and more expensive to do a lot of this, and really with the technology available, it should be getting less expensive. Like,
right.
Now that we have this Zoom, we have digital signature elements that are super private and encrypted. We've got a lot of the tech stack there that could make these workflows so much more efficient. So I think that's where the lead will be. And then how that ultimately synthesizes with the clerk's office will be interesting, because at some point everybody's going to have to get on the same page. And now, could you have two channels? Who knows? Maybe you do, because really the clerk's office, if you get technical about it, a lot of what they are doing actually does more more speak to especially the lending mechanics of it. There's a whole nother line of it that more is on the taxing side. So there could almost be a disconnect where the taxing authorities have their own platform. And in some cases that already happens. And then the land records have their own platform. I know I'm all over the board. I feel like the lenders are going to be the real drivers of this. They are trying to figure out ways to make their expenses and their maintenance of these mortgages. Yeah. And they're probably the most impacted by how the system is run currently relative to where it could be. Because for us, we're collecting fees. So it's
right.
You know what I mean? It's sort of like, hey, I almost feel like the title world is playing defense. They would just as well leave everything the same.
Yeah.
I don't think I don't think that's the way to look at it.
Yeah. Yeah. Which I think you're on the right side of things, because I know a lot of service providers will look at new technology coming up, and some people try to fight it and others lean into it. And it seems like those who fight it end up becoming obsolete by fighting the very technology that they thought would make them obsolete, as opposed to utilizing the technology and then working on higher level problems. I've noticed people, even with like the introduction of ChatGPT and tools like that, like certain marketers are really pushing back on it, where it's like, maybe you could lean into this, utilize the tool and figure out what other high level problems or services you could provide while utilizing that tool, now that you've freed up, a couple hours of your time.
In my thesis around, like where we end up in the real estate title escrow profession is there's these tools will make it, once again, faster, easier, more secure, and candidly less costly if they are implemented, supported, and adopted. And those are all fairly sizable steps that have to take. And we've seen, I'll give you sort of a case in point, 2 technology stacks that have been around for quite some time and have just been a push and a pull. And COVID really pushed them over the top. And now we're starting to see some momentum behind the adoption. But e-signatures, so doing everything in a digital signature, which you think about it now, it's like, why did we not do that 10 years ago? But there was all this concern over fraud and this, that, and the other. And but I think, now with really DocuSign and some of these other tools out there, they've just made it where the consumer is really comfortable with the technology. And, with this little tool in our hand, the smartphone, there's a lot more interaction that we can do. And so it makes it you're not running home and logging on your laptop or your desktop. You can just do everything from your phone. Well, guess what? In the real estate agency side, that's what, once people do that, they're like, you want me to go print something out? I'm not doing that. So I think the title world is finally opened its eyes that tool is, I know it sounds basic, but that, hey, we need to start using it more effectively, embracing it, not trying to pick it apart for legalities. So that's one. And we do look at fintech, and they sort of tell us, the do's and don'ts, like, hey, we're not ready for you to do a digitally signed mortgage because we don't want the person in the court of law, fighting us, or a digital note, but we'll let you do all 88 disclosures with a digital signature, which makes it really easy, and it speeds everything up. And then this remote online notarization, the ability to be remote and to sign legal documents with an authority that validates and verifies that person is who they say they are. And you can notarize them. And certain docs have to be notarized for legal purposes. And so those are 2 things that, painstakingly taking a long time. They've been
it'll be interesting. With what signatures still required on title. And I see the argument against it, like, where they introduce those red light cameras at one point.
Yeah.
And those have kind of become obsolete because everybody was like, well, how do you know I was driving the car? Like you can't, so that was kind of an interesting
Louisville, Kentucky's actually getting them. How funny is that? Like we have not had them. And I read an article and they're like, Louisville just passed to get red light. And I was like, I thought those were like on the way out because of just what you said. I thought that like they had established that it's such a high burn rate on the law enforcement to try to like enforce them that it's like, it's more of a deterrent. You just say you got them, but you really don't necessarily like putting one of those fake cameras up, it's just there because literally I better stop. There's really nobody on the other side of the camera.
Exactly. Oh, that's funny that they're introducing them, and maybe the technology is getting better. And that was just when you put into words why the wet signature is still required. That's kind of what it made me think about.
Yeah, and there still is. There's still a lot of. Once again, it typically on 90-something% of it, this always comes back to legal. And when you're talking about banks, and this actually ties all the way back into the start of our conversation, talking about like what's going to really get this thing rolling in the right direction from a technology implementation. It's I believe in my heart of hearts, they really will be the ones that are the lead because they're the largest sector in the space with the most dollars in investment, and they have the most investment capability, but they also have the most liability. So with that comes a great amount of responsibility, a lot of abilities there. And so we're keenly watching what they do. And if you read stuff on what JP Morgan's doing, if you read what some of these larger, the BNY Mellon, and I guess I believe what I'm reading. That's a story for another day, but there's a lot of chatter and investment that is going on within the blockchain space by these groups, which would tell me that we're on a pathway. There have been a couple recent sort of turnabouts. I know there's been a couple of banks, commercial, something bank, just stopped on their digital currency development. They'd gotten pretty far down the road, and they've sort of said, hey, wait a minute, with everything that went on with FTX, we're just uncomfortable being a custodial for consumers. So it'll be interesting to fall out of the FTX stuff, and if that moves some of these banks back away. But when you're $500 million invested in, is there turning back? Maybe there is. I mean, I'm still of the belief that the pathway is set, and it's a matter of not if, but when we start to really see some shift.
Yeah, I agree. It's kind of funny with all the news coming out around crypto and a lot of bad news. Some of the good news can kind of get lost in the shuffle, but I've been reading some pretty cool articles involving institutional involvement, and it really seems like the goal is to have a more clear path forward, at least. So at least we can get, take our 10 steps, maybe clear a little bit more. And I think that's just the nature of introducing this technology is some people are going to, take a little too much risk and they might get hammered for it. And then we'll have to regulate around that unforeseen risk that they took. So it'll be a slow path, but it's been cool to see.
Well, and the one thing I'd comment is it'll be interesting to see how the industry, because there's a lot of different stakeholders currently, or not stakeholders, I would say there's a lot of different mindsets around the deployment of the technology, and then how DeFi interplays in that, and centralized exchanges, controls, and so there for a while there was a fairly sizable drumbeat around beware of central exchanges. I think FTX definitely amplified a lot of that. So then you sort of go into a more regulated environment, which once again, a lot of people were not welcoming that. We have been fairly consistent from the start, and this has not endeared us to a segment of the blockchain crypto world, but that we think regulation is a bedrock. I mean, we just think very squarely that it's a necessity for what we do. And, do I agree with it all the time? No. I mean, there's a lot of elements of CFPB that I just shake my head, but it's a rule book that we're all in agreement on, not in agreement on, but we all understand that there's a rule book. And so, and if we have questions about it, we reach out to other people and get clarification. But to do sort of the Wild West and hope that, the invisible hand will ultimately lead us in the right direction, albeit I'm a huge Austrian economics, fundamentally agree with a lot of the elements of it. Big Adam Smith. I mean, there's a lot of things there that I think are bedrocks, but for the industry to mature and to see see it become more of a global, or not even global, but a consumer centric model, if that's what I think we want to go. I mean, if you build all this technology and nobody uses it, what good's the technology? So I don't know. That's where I am on it. And I know, like I said, I know there's a lot of people that have very differing opinions around that and feel like that's the cop out. I think it's the pathway that to me seems the most the most doable at this moment in time. Yeah,
and I think kind of a point that I've drawn from our conversation is you're sort of as far as the currency goes, you're kind of currency agnostic, but regardless of the currency, blockchain still has the power to revolutionize the industry. And that's something I definitely agree with. And it's something that I'm trying to get out there and put that word out on. I know, like on my channel, it says the crypto realtor, and that's a little more catchy than the blockchain realtor. But blockchain's really going to be the impact player within our industry. I love, certain cryptocurrencies and some use cases they're offering. But at the end of the day, as a real estate professional, my focus is on how blockchain can make the impact, regardless of what the currency involved in that system is. And it sounds like you have a similar outlook.
Yeah, and the last thing I'll leave you with is, and this is a bit of the squirrel ran by, which I'm pretty good at getting distracted, but something that popped in my head, and this is more of your generation and younger, is this the way that we go about thinking about real estate and potentially the elements of Web3, the metaverse, those things. My kids have grown up on Fortnite and some of the other games, and what's the one where they build stuff, like
Minecraft.
And so those, that's the one I like. The Fortnite I could give or take, but the Minecraft I actually enjoy. Show me stuff because it is really cool. But they're that age group really interacts so differently than me and my group on just how we go about as a consumer and how we look at things. So I think for us this is for the whole real estate space, we have to be open-minded to to look at things with a wide lens and say, okay, this would this benefit the parties that be, and down the road, if you really think about it, if you combine the data analytics with the ability through AI to do some of the automated information gathering And then you layer on top of it, some of the elements of the metaverse and just how people are going to potentially shop for real estate. I think those will all be meaningful. I'm not say they're all going to, that they're going to displace real estate professionals, because I disbelieve, but we just have to be able to use the tools, and we have to be able to understand them. And I'm not even saying you have to be a subject matter expert, but you at least, you said a long time ago, like, hey, someone came with an idea or called a problem. And what we did is we just stepped back and worked through a solution. And it really wasn't that like a big of a mind shift or I love to say that we were like super smart about how we did it. We just broke down the workflow and just said, okay, what can we do to try to make this where the consumer is going to have a good experience? Because this is what they told us what they want. My job is to legally figure out how we can do it for them. So that's just one sort of high level thought that we've been, toying with. And when we talk to some of the real estate professionals, especially on the brokerage and the sales side, we're super interested in how they're thinking about consumer interface, because we as a transactional support partner, we need to be in line with that. We don't need to like totally disrupt the flow of how the consumer experience is, because we're so beholden to the traditional way to do things. So that's just an aside.
Yeah. And maybe one last thing, I won't hold you too long, but kind of segueing into, we talked about metaverse or Fortnite and Minecraft. I know at Millenial, you guys have created some digital twins without, significant use case at this point, but you're taking those baby steps. So maybe you could tell us a little bit about what you've done there.
Yeah, no, thanks. And I'm try to be pretty transparent. We've had, pretty low adoption so far. I think timing of our rollout was a little precarious with everything that's gone on in the space. But, we created a tool where people could essentially take their deed, and we would take the information, validate, verify it, and then we would actually create an NFT, and we would log that information, the recording information, the sourcing information on the Ethereum blockchain. So you've got it on the blockchain. And then we'd also create the digital twin, which is a replication of your deed in the form of an NFT. And our housing was on OpenSea, but you could put it wherever you would like. You could do it privately if you wanted. You could do it on an open exchange if you wanted. But the real idea was to create that sort of ecosystem of early adopters. All that being said, we haven't seen a whole lot of lift yet. I think for us, it'll be about finding the right partnerships that are interested. And we're talking to a couple of people about, how cool would it be? Would it make sense? Whether it be as embedded as some type of educational forum, or people who are very interested in real estate and blockchain. This could be one of the things that they have, and it could essentially sort of be a center for a Discord, whatever. That the challenge is the tipping point. Like,
right,
if we gave 500 of these NFTs out, have we really, are we boiling the ocean? And there's an argument to be said that yes. So we're trying to we've pulled back. We still offer it, and we're still very excited about it. But we've got to find, I think, the right inflection, and it'll probably look a lot different than we currently have. To be honest, I could see us partnering with maybe an exchange, or somebody was you need to go reach out to Ava Labs, Avalanche, and talk to them. And we've considered all of that, but it's, you could test it out in a ton of waters, and I think, and really burn a lot of calories. So we got to be careful. We're sort of, we're not the field of dreams quite yet. If you build it, they will come. We're trying to be a little more strategic.
Yeah. And I admire that about your approach, and I really respect it. So I won't take up any more of your time, but thanks a lot for joining us for this interview.
Yeah.
Where can the audience find you?
Yeah, so probably the best place is my LinkedIn. Fairly active on that, as Tommy knows. Chip Ridge, ChipRidge. You can also check us out at millenialtitle.com. There are some backlinks that we've got a podcast on there. We also have millennialblockchain.io, millennialnft.io, and those just sort of talk about some of our products or theories around blockchain and NFTs. So, or my email, chip@millennialtitle.com. You can reach out to me directly. I'm passionate about the discussions and the space itself. Always love talking to people like yourself who are really at the forefront. Really admire what you're doing. Think that you're way ahead of the curve. And so anytime that we can collaborate with forward-thinking real estate professionals, we're definitely going to try to take that opportunity. And our goal is, the abundance mindset. If we can get there, like more people involved, more thinking involved, more opportunities, more connectivity, and then it only takes. What if Google pays attention at some point and says,
right,
"Wow, we're going to put you in our moonshot." Our moonshot group, and see what happens with some of these ideas. I mean, that's where I think some inflection points may or may not happen, not specifically Google, but that type of collaboration, right, where you really have, it's going to take a lot of resources too. We know that.
Right.
So, but we want to control that. Tommy and Chip want to be involved in that. We don't want to let someone else do it. And then we're like, oh, crud, what happened?
Yeah.
There's no more title insurance. Oh, great. I got to go find a new job. There's no more, so
yeah.
I think we all need to be mindful that participate or be prepared.
Yeah, absolutely. It's a team effort. And that's something I've learned a lot from the commercial space as well. I'm sure that abundance mindset is definitely important, especially when you're operating a business of your magnitude and trying to make real change in your clients and consumers' lives. So thanks again for everything you're doing.
Always fun catching up, man. You're great, and keep doing your thing, and hopefully we'll connect soon.
Absolutely. Thanks, Chip. Talk to you soon.
Take care. Have a good one. Bye.